minimum weightage of chapter number 2. Now this is chapter number 3, audit report, 10 to 15. Sometimes it go up to 20 to 25 marks also. Sometimes the weightage will go up to 20 to 25 also. Fine. So what is the objective here? Very simple. We are learning how to draft an audit report. Once we become an auditor, once we conducted the audit and completed the audit, how to draft the audit report. Now we understood what is an audit, what is the nature of auditing, what limitations we are suffering from, what is the objective of the audit, and what are various types of engagements that we can perform, and why independence is important, what are the ethical compliances that we must comply with, and how to establish terms of engagement. All that we understood. Now the next thing in audit is what? How to do the audit. How to do the audit we'll discuss later. Once after we completed doing the audit, what we should do ultimately? We should express our assurance. We should give our assurance report. In audit, that report is called as what? Audit report. In audit report, what we will give? Opinion. What we will express? Opinion. But today, audit report is not just about opinion. You see, audit report format is there. In the same book at the below I have given contents of audit report. What is it? Contents or elements of audit report which is conducted as per standards on auditing. How to give audit report? What are the contents of audit report? This report shall be in writing. The report must have title. The title must contain the name Independent Auditor's Report. The title must contain a name called Independent Auditor's Report. These are various companies' auditors' report. Tata Motors I will take for a better example. Yeah. This is Tata Motors auditors report. You see there is a title right clearly here. Independent Auditors Report. There is a title. The second thing in the audit report is what? Addressee. You should mention addressee. Generally addressee whom we will mention in case of general purpose financial statements to the members. In case of special purpose financials to the appointing party. Whoever appointed you, that party. Then the first thing in the audit report after addressee and title is the first thing that we give in audit report is what? Opinion. You see Tata Motors, they gave opinion. Now, how many types of opinions we have? You see the introduction to this chapter. I think in 705 I have given. Yeah, in 705 I have given. We have to give opinion, right, ultimately. As I already told in the previous sessions, opinions are two types. Either they are positive opinion or they are negative opinion. But, just a minute. Just a minute. So, the opinions are broadly two types. So, one is positive opinion, another one negative opinion. Positive opinion is called as unmodified opinion. Negative opinion is called as modified opinion. That is what until now I am telling. But I just for the sake of convenience, though I use the word positive opinion, negative opinion, the actual words are what? There are two types of opinions. One is unmodified opinion, another one is modified opinion. When I will give unmodified opinion, suppose I was appointed as an auditor of a company where they prepared books of accounts and financial statements completely done. And I verified financial statements and books of accounts, everything. And financial statements, after I verified, I concluded that they are completely true and fair. They are completely true and fair. If they are completely true and fair, tell me, do they require any modification? No. Books of accounts and financial statements are completely true and fair. They don't require any modification. I will give which opinion? Unmodified opinion. Simple. Suppose I found some mistakes. In the financial statements, balance sheet, P&L, I found some material mistakes. I reported to the company. Sir, there are mistakes like this. Can you please rectify? They said, we will not modify. The company directors replied, no. Balance sheet P&L is prepared, finally signed by the directors also. Now all the directors went for abroad and all. They went for some works and all. They can't come back. If I modify again, they have to come and sign it. It is not possible to modify the financial statements. Let the mistakes be like that. Okay, you don't modify the financials so that they are free from mistakes. Like, now tell me, when I'm asking them to modify, what does it mean? Financial statements are free from material misstatements or not free from material misstatements? Since they are not free from material misstatements, what I will do? I will modify my report. First you modify. I'm giving you chance. You modify the financial statements so that they are free from MMS. You're not modifying. Okay, I will modify the report. The point. If you don't modify to ensure that the financial statements are free from MMS, I will modify the report because the financial statements are not free from MMS. So modified opinion indicates financial statements requires modifications. That is what modified opinion indicates. Unmodified opinion is called as unqualified opinion, which is also called as clean opinion, What is clean opinion? They're completely true and fair. Not even a single mark. That's called clean chit, clean opinion. Modified opinion is again 3 types. Modified opinion are again subclassified into 3 types. Qualified opinion, adverse opinion, disclaimer of opinion. Modified opinion is subclassified into again 3 types: qualified, adverse and disclaimer. Now some of you might have got the doubt, why unqualified opinion is a positive opinion? Why qualified opinion is a negative opinion? Generally qualified means what? It's a positive terminology, right? Why it is given under negative connotation? Generally medical terminology, legal terminology, qualified means what? I have a qualification there. Means what? I have a reservation there. I have an objection there. Qualified opinion means conditional positive opinion. What is it? Conditional positive opinion. It's a positive opinion only, but with exceptions. So qualified opinion is a conditional positive opinion. It's a positive opinion, but it contains some exceptions. Unqualified opinion means it's a positive opinion without any reservations, without any qualifications, without any exceptions. That is called unqualified. Qualified means some exception is. That is what the meaning of qualified opinion. Fine. So under what circumstance I'll give unqualified opinion, when I will give qualified opinion, when I will give adverse opinion, when I will give disclaimer of opinion. That is what we are going to learn in this chapter. Not just opinion. You see, in audit report we have various parts. Various parts were there. We need to discuss, we need to discuss opinion, then how to draft this opinion section, what are the definitions of the opinion, what is basis for opinion, and we have so many other material uncertainty related to going concern, key audit matter, emphasis, other matter paragraph. So many were there like this. So we will be discussing all of this in the auditor's report chapter. So opinion discussion alone, opinion discussion alone takes some 20 minutes to half an hour in revision. 20 minutes it will take minimum. So fine, let's discuss that. When auditor will give unqualified opinion, like as I already told, it's an unmodified opinion. When auditor concluded, based on sufficient appropriate evidence, that financial statements are free from material misstatements and are prepared in accordance with applicable financial reporting framework, which means there is no difference between what is reported and what is applicable as per framework. When there is no difference between what is reported and what he has to report as per framework, then the financials are prepared as per the framework. When they are prepared as per the framework, there are no material misstatements. When there are no material misstatements, I will give positive opinion, which is called as unqualified opinion. Like in a simple term, if you have to look at the balance sheet, suppose fixed asset 100 crore, very simple example I will take. Current assets 100 crore, equity and liabilities 100 crores, current liability 100 crore, and I verified, I found that fixed assets are completely correctly valued, correctly done. I have seen the asset register, I have physically went and seen some assets randomly, everything is pakka, documents are pakka, this value is correctly arrived, depreciation calculation is perfect, current assets, inventory, trade receivables, everything, external confirmations I got, everything is perfect, current liabilities perfectly accounted, equity perfectly accounted, profit and loss account is perfectly accounted, no mistakes I found. Which opinion I'll give? Unqualified opinion. They are all crores. I'll give which opinion? Unqualified opinion. Suppose in this current assets, there is an item called inventory. The inventory value is 30 crore. Inventory value is 30 crore. This inventory net realizable value is 29 crore. The net realizable value is what? 29 crore, but company showed 30 crore only. NRV they did not consider. Now, is there a misstatement? How much is the misstatement? Is it material to this company? Yes, 0.5% of the total assets. It's 0.5% of the total assets, and it is 0.5% of the turnover also. Let us assume company turnover is 200 crore. Anything generally, anything which is 0.5% of the turnover, we consider material. We generally consider 0.5% of the turnover as material. Now, 1 crore worth of mistake is there, or let us assume 2 crore, 1%, for better understanding. 2 crore worth of misstatement is there. Inventory NRV is 28 crore, but company showed inventory at what? 30 crore. 2 crore worth of mistake is there. Now, when the misstatement is 2 crore, which is material, can I, whereas remaining fixed assets, remaining current assets, everything is right. Remaining current liabilities and equity, everything is right. Just that inventory valuation 2 crore went wrong. To that extent, profit and loss account profit also overstated. To that extent, reserves are also overstated. Just combined effect. Except this 2 crore, rest everything is accounted properly, everything is disclosed properly, everything is correct. Which opinion I should give? Can I say this entirely is wrong? No, they are right entirely, except that 2 crore. So that is called qualified opinion. Suppose same example you take, fixed assets 100 crore, current assets 100 crore. In this 100 crore, 30 crore is inventory. 30 crore is what? Inventory. In this inventory, 2 crore worth of inventory is with the third party. 2 crore worth of inventory is with the third party. I want to get confirmation from the third party. I want to get a confirmation from third party whether this 2 crore worth of inventory is there with him or not. Company is not allowing me. When I ask the reasons, they said, sir, with the third party right now issue is going on. Please don't disturb them. Already some court case is going on between us. So even the mediators, lawyers also told not to interact with the third party for a certain number of days until the court dispute resolves. But you are showing in the balance sheet that you have to receive from the third party 2 crore worth of goods. You are saying this 2 crore worth of good is lying with the third party for some work, for some job work you sent. How do I know whether this 2 crore is really with him or not? Sir, no sir, this is the problem. Now tell me, is this a legal limitation or not? I am unable to get evidence here, 2 crore. Can I say this 2 crore is really lying with the third party? Can I say no? Or can I say this is completely fraud? I am unable to decide. Now tell me, since 2 crore worth of information, I don't have sufficient, since 2 crore worth of item, I'm not having sufficient information, can I say, sorry, I can't give opinion on the financials? Rest of the items you verified, na? Rest of the items you verified. I agree, 2 crore is material. But remaining items you verified. No, even though this 2 crore is material, remaining items you verified. No. Give opinion on that, sir. Okay, I will give. Qualified opinion I'll give here also. Which opinion I'll give? Qualified opinion. Except for this 2 crore, rest of the financial statements are true and fail. What about this 2 crore? I don't know. We did not get evidence. Whereas in previous case, 2 crore worth of material misstatement is there. There is a proof. I have a proof. NRV workings is there. 28 crore. Your company valued at 30. I have a proof also. There is a mistake. It is proved. But company is not rectifying. So I qualified saying 2 crore is wrong. Whereas here, I don't know whether 2 crore is right or 2 crore is wrong. I don't know. Then also I will give which opinion? Qualified opinion. Here exception is what? I am not saying 2 crore is wrong. I am saying 2 crore I don't know. I did not get evidence. Except that rest of the financials are true and fair, except for an amount of 2 crore worth of inventory lying with third party, in respect of which we are unable to obtain sufficient and appropriate evidence. That itself is enough. That exception, you indirectly mentioned that 2 crore worth of inventory is with third party. We did not get any evidence, except that remaining financial statements are true and fair. So indirectly, what are we telling to the people? 2 crore worth of inventory, we also don't know what exactly happened. Directors will explain them later on. Just to, what if here it is not 2 crore worth of mistake, but it is 15 crore worth of misstatement. NRV is how much? 15 crore. Cost is how much? 30 crore. But company showed how much? 30. Whereas NRV is 15 only. Now tell me, 15 crore worth of mistake is there. You know what is actual company profit? 1 crore only. Right now, what is the profit of the company as per P&L? 1 crore. If at all they value closing stock at NRV, it is not profit. It is going to be 14 crore loss. If at all they value this inventory at NRV, closing stock will be reduced from 30 crore to 15 crore. Which means P&L account credit total will reduce by 15 crore. Profit 1 crore means automatically 1 minus 15. 14 loss it will be showing. Complete position and performance of the company will alter altogether. Now can I say P&L is true and fair except this 15 crore? You cannot say the bike is very good except the engine. Predominantly it's pervasive, yes or no? This is actually what? Pervasive. What should I do? Adverse opinion. I will say that financial statements are completely not true and fair. I will say that financial statements are not true and fair. Because material mistake, not only material, significantly impacting the financial statements as a whole. Pervasive misstatement, correct? Suppose, let's assume here it is 20 crore. 20 crore worth of inventory he is saying lying with the third party. And he is asking me not to get a confirmation from the third party, and I can't even go and visit. 20 crore, 20% of the total assets of the company. 20 or 10% of the turnover of the company. This much worth of inventory is lying with the third party. Okay, it's okay, no problem. But I want to go and verify. Company is not letting me. Now tell me, can I give opinion on this financials? Can I give opinion on this financials? I want to give. Everything is true and fair except this 20 crore. Suppose no, I'm a mechanic and somebody called me to verify bike condition or car condition. Except engine, you verify everything and tell me what is the condition of the bike or car. How can I? Yes or no? Array a material item, this is not just material, it is a pervasive. If at all this goes wrong, entire balance sheet picture will be wrong. Entire P&L will go wrong. Shareholder's decision will become completely different. Such a big item, you're not giving me access, you're not giving me information. How can I give opinion? I will not give opinion if you don't give me information on this. Tell me, if at all client is not giving me information about 20 crore worth of item in this case, will I give opinion? Or can I say everything is right or everything is wrong like that? Can I come to any conclusion? I cannot. If I am unable to conclude whether to give positive opinion or negative opinion because I don't have evidence for a material and pervasive item, which opinion I'll give? I will not give opinion, and that not giving opinion is called as what? Disclaimer of opinion. Disclaimer of opinion means what? Not giving opinion. Denial of opinion. Understood? When disclaimer of opinion comes, when there is a material misstatement in the financials or non-availability of evidence. Exactly. You will give disclaimer of opinion not when you found a material mistake. Disclaimer of opinion will be given generally for non-availability of evidence. That too, evidence is material and also pervasive. Qualified opinion also will be given when evidence is not available. Not available evidence, that time also will give qualified opinion. But their evidence is material, but not. We give qualified opinion in another circumstance. Mistake is there. I have a proof. And the mistake is material, but not. Suppose if the mistake is pervasive also. Exactly. Over. Confident. So the material opinion discussion is mostly over. We have to discuss the definitions part. We have to discuss the definitions part. They have given a diagram here. Suppose you got evidence. Suppose you obtained sufficient and appropriate evidence. Is material misstatement existing? No. You got evidence that there are no mistakes. Automatically, will pervasive concept apply? Not. So directly I'll give which opinion? Unqualified opinion. Have you got the evidence? Yes, I have got the evidence. Do you found any material misstatement? Yes. Do you have a proof for that? Yes, I have a proof for that. There is a material mistake. Is it pervasive? No. Then which opinion I'll give? Qualified. Suppose I have found material mistakes and it is also pervasive. Adverse opinion. Suppose now you see here the questions are different. Here the questions are different. Here the questions are different. Observed? There are two scenarios. One, I'll highlight with some other color. This is one question. This is another situation. This is another situation. Getting it? This is a situation of evidence is obtained. This is a situation where evidence is not obtained. When evidence is not obtained, can I talk about misstatement? Because I don't know whether it is right or wrong. How can I talk about misstatement if I don't have evidence? If evidence is not there, I can only talk about its materiality. Correct? I did not get evidence. What you can think of next thing, is it big item or small item? If it is big, if the answer is yes, but the effect is not pervasive, which opinion I'll give? Qualified. Except that big item, rest of the financial statements are true and fair, I will tell. Suppose if it is pervasive, means ignoring this, I can't give opinion. Keeping this aside, I cannot give a qualified opinion. Qualified opinion will not be enough to communicate gravity of the situation. If I keep this aside and want to give qualified opinion, that is not sufficient. That is not that kind of just material. It is pervasive. That time what I will give? Disclaimer of opinion. Now tell me, when I have not obtained evidence, or when I have obtained evidence and found material misstatements, am I talking about individual items or collection of all the items? Aggregate picture I should see. What I should see? Aggregate picture I should see. For example, suppose inventory, debtors, 2 crore mistake is there. 20 crore worth of inventory is with the third party. In the same 200 crore turnover company, 2 crore worth of debtors materially misstated. 20 crore worth of evidence I don't have. Now tell me, 2 crore worth of mistake I found, 20 crore worth of evidence I am not getting. Which opinion I should give? As a whole check. Major item you are not getting evidence. Major item you are not getting evidence. Pervasively you are not getting evidence. Forget about this mistake. Give disclaimer of opinion. Which opinion? Disclaimer of opinion. Getting it? Total effect we should see. Understood? That's it. These are various types of opinions. Now, in the next session, what we will be understanding is how to draft these opinions. What are the definitions of these opinions? Another 15-20 minutes, 15 minutes hardly it will be over. Then immediately we'll be discussing basis for opinion section. Confident? So, in audit report, now you see Tata Motors, they just gave a side heading called opinion. You know what opinion they gave? Unqualified opinion. If at all in the audit report, the side heading is simply opinion, that's unqualified opinion. Suppose if you are giving qualified opinion, you must use the word qualified opinion. If it is adverse opinion, you must clearly put the side heading called adverse opinion or disclaimer of opinion. Now, whatever opinion you gave, for that some basis will be there. Na? What is the basis for opinion is what the next section in the audit report. What is the basis for the opinion? Suppose if you give qualified opinion, basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. When you are modifying the opinion, what are the points you should consider? All that we will be discussing in the next session. With this opinion discussion is mostly done. Only opinion discussion. Drafting part we should see. Definition part we should see. If that is also completed, opinion discussion is completed, and then we will be moving to basis for opinion. Once that is also completed, then we'll be moving to emphasis of matter paragraph, other matter paragraph, key audit matter, material uncertainty related to going concern. Once that is completed, then we'll be discussing CARO. With that, audit report will be completed. Okay? That's it. Okay, we'll meet in the next session. So let's begin the discussion on the continuation of audit report chapter. So we have discussed about various opinions. Like the opinions are broadly two categories, unmodified opinion and modified opinion. And we understood what is unmodified, modified opinion briefly. And we also understood when unmodified opinion, are of various categories like qualified, adverse and disclaimer. And when we will give that opinion, that also we understood. So if you observe now, we will give qualified opinion in two circumstances. Whereas disclaimer of opinion will be arising only in one circumstance. Adverse opinion will arise only in one circumstance. Whereas qualified opinion comes in two circumstances. What are the two circumstances? One, you have got the evidence and you found that there is a material misstatement, and the misstatement is material but not pervasive. Another case where we will give qualified opinion is you are unable to obtain evidence. You are unable to obtain sufficient appropriate evidence, and the impact of that evidence that you are not able to obtain, that impact is going to be material but not pervasive. Suppose if the impact of the evidence that for which you are not getting, impact of the information that you are not getting, if it is material and also pervasive, then we give disclaimer of opinion. Suppose if the misstatement is material and pervasive, then we give adverse opinion. So this is what we understood. So now if you look at the broadly the definitions, If you briefly look at the definitions, no. So qualified opinion, the auditor shall express qualified opinion when auditor obtained sufficient appropriate evidence, concluded that misstatements are material but not pervasive. Suppose if it is misstatements are both material and pervasive, adverse opinion. Now you see second part of the qualified opinion. When in another circumstance I will give qualified opinion, the auditor is unable to obtain sufficient appropriate evidence on which to base opinion, but auditor concluded that possible effect of undetected misstatements, if any, could be material but not pervasive. You see, they are using the word possible effect of undetected misstatements. Possible effect of undetected means what? We have not got the evidence. We didn't get the evidence. Without getting evidence, how do I know whether there is a real misstatement or not? But what if there is a mistake? What if the item for which I am not getting evidence, what if 2 crore worth of inventory is not with a third party? What if it is a fraud? Possibility we talk. When evidence is not available, we just think of possible effect of undetected misstatement. That is what we actually think of. So what is the possible effect of undetected misstatement? What is the possible effect if it is just material but not pervasive? When evidence is not available, we think of the impact. We think of the impact of mistake if it is there. Are you clear? Suppose if the impact is going to be possible effect of undetected misstatements, if any, could be going to be material and pervasive, we give which opinion? Disclaimer of opinion. You see here there is a matter. The auditor shall disclaim in extremely rare circumstances involving multiple uncertainties, and auditor concluded that notwithstanding having obtained evidence, like sometimes you may not conclude disclaimer of opinion at the beginning of the audit. You might have conducted some 20 days, 30 days audit, you gathered so many evidences already for so many items, but suddenly one big item is there which is pervasive, huge item, for that evidence is not available, and you concluded, excluding that you can't give opinion, like qualified opinion you can't give there. You decided without this evidence, I cannot frame an opinion, you understood. Now tell me, whatever evidences you gathered all these days for remaining items, will you consider that? Ignore it, notwithstanding the fact that evidence is available for other items. When the auditor concluded that for pervasive item you are not getting evidence, you may end up giving which opinion? Disclaimer of opinion. Now what is pervasive? Like we have seen, material means okay, we can understand. What is pervasive? Pervasive means very significant. In fact, I can say pervasive means substantial. What is it? Substantial is best word to describe pervasiveness. Material means it's big amount, significant. Substantial is much more severe. When do we conclude the financial statements are pervasively misstated? When substantial number of items are misstated. Sometimes there may not be number of items, there may be only single item, but that single item will be substantial portion. That single item will be substantial portion. For example, what is pervasive? It's a term. Pervasive effect is a term used in the context of misstatement to describe effect on the financials of or possible effect of the undetected misstatement. In case of inability to obtain evidence, possible effect we talk. In case evidence is obtained, mistake is there, we talk about the actual effect. Pervasive effect on the financials are those, in auditor's judgment, pervasive effect is something what? They are not confined to specific element. They are not confined to a specific account. They are not confined to a specific item. They are not confined to. What does it mean? They are not limited to a specific item. What does it mean? In the balance sheet and P&L, so many items are affected. Not some 1 or 2 items. It is not some specific item. Many are affected. But if so confined, sometimes it may be only a specific item. It may be only a specific account. It may be a specific element. Some specific element only affected. But that element represents a substantial portion of financial statements. Pervasive means what? Generally, pervasive effects are those, in auditor's professional judgment, they are not limited to specific item. Means they are affecting multiple items, or they may be limited to specific item. If so confined to a specific item, that specific item could represent a substantial portion. For example, the company has made an investment in joint venture, and that investment value in the total assets is more than 50%. That investment value, you are unable to get information behind it. You are not getting data behind that investment. You got evidence for fixed assets, you got evidence for current assets, you got for remaining non-current assets, all that. For one item only you didn't get. But that one item is what? 50%, 70%, 80% of the entire total assets of the company. Single item only. Still, it may become pervasive if that single element is substantial item. And pervasive can also come. The concept of pervasive will also come into picture if at all they are related to disclosures that are fundamental to users. One of the fundamental disclosure is what? Going concern. Suppose if the company made going concern related misleading information. Suppose if going concern related information company is not giving correctly, they are not giving properly the picture of going concern correct manner, we call that also as what? Pervasive. Now, so this is what pervasive means. So tell me, ultimately, which type of opinion is appropriate? Like we know, suppose if we are unable to get evidence, we have to modify the opinion. If at all we find material misstatement, we have to modify the opinion. We know that. Now, which type of modified opinion? Because within the modified opinion, qualified is there, adverse is there, disclaimer is there. Which type of modified opinion is appropriate? Depends on what? It depends upon nature of the matter giving rise to modification. Whatever we understood, no, that we are explaining it as an answer. Which type of modified opinion? How do you know? How do you decide whether to give a qualified or adverse or disclaimer? I know you are not going to give unmodified opinion. You are going to give modified opinion. How do you decide which type of modified opinion is appropriate? It depends upon nature of the matter that gives rise to modification. Why I want to modify? First of all, is it because you found a material misstatement? Or is it because you are unable to get evidence for a material item? What is the reason? Is it because of non-availability of evidence? Or is it because you found a material misstatement? What is the reason? That is what? Whether the financial statements are materially misstated or you are unable to obtain sufficient appropriate evidence. What is the reason? So which of these reason? What is the nature? Not just that. Suppose, case number A. This is the reason I want to give modified opinion. What is the case number A? Financial statements are materially misstated. Okay, you decided to modify the opinion because of this fact. Which modified opinion? Qualified adverse? Depends upon judgment about pervasiveness of the effect. A judgment about pervasiveness of the effect. If it is not pervasive, I will give qualified opinion. If it is pervasive, I will give adverse opinion. Suppose the nature of the matter is inability to obtain sufficient appropriate evidence. The nature of the matter because of which I want to give modified opinion is I am not getting evidence. Then what is judgment about pervasiveness of possible effect? What is your judgment about pervasiveness of the possible effect on the financials? That is the second point you should check. Suppose if it is not pervasive, I am not getting evidence for material item, but it is not pervasive. Which opinion I will give? Qualified. If it is pervasive also, what I will do? I am not getting evidence for a material item, moreover it's a pervasive item also. Which opinion I will give? I will not give opinion. I will straight away disclaim the opinion. That's it. So this itself can be asked as a question in exam, 3 marks question. Which type of modified opinion is appropriate? What are the, discuss about that, discuss about the factors that assist the auditor in determining the type of modified opinion. They will give you a question like this. What type of modified opinion is appropriate? It depends on what. So this is how they can ask. That is what below I have given it in the form of a table. So now, like how these opinion wordings and all will come. Like just now I showed you definitions. Yes or no? Unmodified opinion, modified opinion, qualified, adverse, disclaimer. We saw the definitions. We understood which type of opinion is appropriate. All that we understood. Now let's look at how the wordings will be looking like. So this is one of the illustration in the audit report. This is original 700 standard. Inside that I am showing you the illustration. You just observe it and then leave it. No need to read it. It is there in the CA Inter in your material. It says CA Inter audit material is an ICA material. Inside that audit report chapter is there. Inside that it is there. Inside audit report chapter in the ICA study material they have given illustration. Illustrative formats of audit reports, nothing but illustrative formats of audit report. Suppose how an auditor's report on financials of listed company which are prepared using fair presentation framework. So how this audit report looks like? We know there must be title. What is the title? Independent auditor's report. addressee to the members of the company. First, you see here they are giving this word report on audit of standalone financial statements. What does it mean? Suppose the company that you are auditing, if at all that company has a subsidiary company, you know, Companies Act, subsidiary company definition includes associate company also. Joint venture and associate company both are covered within the definition of subsidiary company under Companies Act. But the accounting treatment is different. How to consolidate a subsidiary is different from consolidation of associate. Subsidiary we consolidate by using line by line consolidation method. Associate we show it as an investment. Joint venture again proportionately we will consolidate, correct? Is this the consolidation method? Yeah. So now when I'm auditing a company which has a subsidiary company, naturally that company will be preparing two sets of the financial statements. One, that company's own separate financials, which are called as standalone financials, which are called as what? Standalone financials. And the group consolidated financials, means that company plus subsidiaries put together, they will combine and then prepare. That is called as what? Consolidated financials. For example, Reliance Industries Limited has prepared separate financial statements which are called as what? Standalone. Across the world it is called as separate financial statements. Or in India we are calling it as standalone financial statements. Reliance also prepares what? Consolidated financials. This includes what? Standalone financials of Reliance plus subsidiary companies plus associate companies plus joint ventures, all put together we will consolidate the group and then show. That is consolidated financials. You know, Reliance consolidated financials includes, first of all, Reliance own financials plus subsidiary companies. 290 subsidiary companies they consolidated, approximately 140 associate companies they consolidated, 30 joint ventures they consolidated, close to approximately 400 companies. Balance sheets and P&Ls were consolidated and presented as a single financial statement, consolidated financial statements of the Reliance. Now, when the company is preparing two sets of financials, which means consolidated financials and standalone, we have to give audit report on what? Both. We should give audit report on both standalone financials, consolidated. 129 subsection 3, which talks about consolidated financial statements related requirement. That section clearly says whatever rules and regulations that are applicable for standalone financial statements are equally applicable for consolidated financials, which means if standalone financials are audited, consolidated shall also be audited. If on standalone financials opinion is given, on consolidated also auditor should give opinion. Clear? Now, when we are giving audit report on two financials, two audit reports will be giving. One is on standalone, another one is on consolidated. So when you are giving two audit reports, you should separately highlight this audit report deals with which financials. You should highlight, right? That's why they are highlighting. Now, directly what is the first thing that in the audit report they are discussing? Opinion. When the side heading is very simple, opinion, what opinion is it? It is unqualified opinion. You see what they are saying? We have audited standalone financials of ABC company, which comprise balance sheet, P&L, statement of cash flow, notes, everything, all that. So introduction they give. What we have audited, what we did, we have audited so and so financials of the so and so company comprising so and so items. Okay, what is your opinion? In our opinion, to the best of our information, according to the explanation given to us, the aforesaid standalone financials give information required by the Act in the manner so required and give true and fair view in conformity with the gap. Did they use any exception? Did they use any exceptions, exclusions, subject to kind of any? Nothing. Straight away clean opinion. Yes or no? In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are giving true and fair view. Clearly they gave, correct? Now you see in this one. Now let us see the illustration on qualified opinion. Let us see the illustration on qualified opinion. Suppose if I give qualified opinion, how the wordings will modify. How the wordings gets modified if we give qualified opinion. Suppose you are giving a qualified opinion illustration due to material misstatement in financial statements. Like what is the misstatement? Here they gave that hint also they gave. Here itself they might have inventories are misstated and the misstatement is deemed to be material but not pervasive. So which opinion is appropriate? Qualified opinion is appropriate, correct? So how auditor is giving qualified opinion? You see the side heading they modified accordingly. Because they are giving qualified opinion, they are using the word side heading qualified opinion. Means as a reader, I need not even actually read the paragraph to understand that it is a qualified opinion. By looking at the side heading, I can understand auditor qualified something, yes or no. You see here, in our opinion, to the best of our information, according to the explanation given to us, except for the effect of the matter described in basis for qualified opinion section of our report. In audit report, we have so many elements, right? Opinion, basis for opinion, key audit matter. These are all called as elements of audit report. These are also called as paras in the audit report. These are also called as sections in the audit report. These are also referred to as what? Sections in the audit report. Anyway, they can refer it to. So these elements can be referred in any manner. So what are they saying? Once again, the aforesaid financial statements give information required by the act in the manner so required and give true and fair view. Now, once you read what is there only in the green letter, like whatever I've highlighted in the green letter, only that you read. In our opinion, to the best of our information, according to the explanation given to us, except for the effect of the only agree. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are prepared. I mean, the statements give information in the manner so required and give true and fair view. Is it a positive opinion or not? But this is not a clean opinion. They gave in between, they used an exception. What exception they used? Except for the effect of the matter. There is a matter, except for its effect. What is that matter? Described in basis for qualified opinion section of our report. In our report only, there is another section. What section? Basis for qualified opinion section. Inside that, there is a matter, except the effect of that matter, the aforesaid financials are true and fair. Except that matter, the aforesaid financials are true and fair. Are you clear? This is what qualified opinion. Now, can they use, instead of using the word except, can they use the word subject to like that, some other alternative? No, that is not permitted. The standard, whatever the standard says, how to modify the opinion, whatever the standard says, exactly in the same wordings you have to modify. Clear? Now, suppose how a disclaimer of, how adverse opinion looks like. How adverse opinion looks like. This is another example, adverse opinion. Why are they adverse? Why are they giving adverse opinion? The consolidated financials, not this. You see, here they have given. The consolidated financial statements are materially misstated due to non-consolidation of subsidiary. Non-consolidation of subsidiary means what? It's a deviation from applicable financial reporting framework, right? As per framework, as per India's accounting standard, or even as per Companies Act, every subsidiary has to be consolidated. And if you do not consolidate, it's a violation of applicable framework, right? You have an evidence that it is not consolidated, right? Is it a misleading picture of the consolidated position or not? So it's a material misstatement. The material misstatement is deemed to be pervasive to the consolidated. So for the consolidated financials, this mistake is deemed to be pervasive. So which opinion we should give? Adverse opinion we should give. And the effect of the misstatements on the consolidation has not been determined. That I will discuss later. So now how are they giving? See, side heading, adverse opinion. Now you see here, in our opinion, to the best of our information and according to the explanation given to us, the accompanying consolidated financials do not give a true and fair view in conformity with the gap that is accepted in India. The aforesaid financials are not giving, they do not give true and fair view. We straight away said they do not give true and fair. Why? Because of significance of matter discussed in basis for adverse opinion section of our report. We have in this report, there is another section, basis for adverse opinion. In that section, there is a matter which is discussed. Because of the significance of that matter on the financials. Which financials in this example? Consolidated financials. Because of significance of the matter on the consolidated financials, the aforesaid financials are not true and fair. So what they discussed here, we will discuss later. Understood? Now let us see, if at all they gave a disclaimer of opinion, how it will be. Illustration 4. Illustration 4. Suppose here auditor is giving what opinion? Disclaimer. Due to inability to obtain sufficient appropriate evidence about a single element. Why we will give disclaimer about a single element? If it is single element, why we will give disclaimer? We won't give, right? That could be substantial portion. That could be substantial. Pervasive means what? In auditor's judgment, they are not confined to specific element, specific account, specific item. If so confined, that could represent a substantial portion. Now you see here, the auditor was not able to obtain sufficient appropriate evidence about single element of consolidated, single element only. That is, he is unable to obtain evidence about financial information of a joint venture which represents 90% of the net assets. Oh my God, 90% of the asset value you did not get evidence. Though it is single item, but representing substantial portion. For a substantial portion, you did not get evidence. For a substantial portion, you don't know what it is. Can you give opinion on the financials ignoring substantial portion? You can't. As a whole on the financials, you can't. Remember, on financial statements, we have to give opinion as a whole. We will not give opinion separately on balance sheet. We will not give opinion separately on P&L, separately on cash flow. No. We will give opinion as a whole. Financial statements. Are you getting it? So, now you look at how the wordings are. Disclaimer of opinion. You see the first line itself they modified. We were engaged to audit. Generally, you see, if it is adverse opinion, qualified opinion, unqualified opinion, we straight away start the sentence with we have audited. We start the sentence with what? We have audited. Here we are mentioning what? We were engaged to audit. Why? Because we didn't audit here. Predominant item we didn't audit. Why we didn't audit? Because we didn't get evidence. When I did not get evidence for predominant item, that is the reason why I want to give disclaimer of opinion. How can I claim I have audited? Major portion when I have not audited, how can I claim that I have audited? So we were engaged to audit. Now here you see, we do not express an opinion on consolidated financial statements of the group. Straight away we started the sentence with what? We do not express opinion on the consolidated financial statements of the group. Indirectly, we don't see. Can I use the word like generally adverse opinion, qualified, unqualified? What is the sentence here? In our opinion, to the best of our information, according to the explanation. If you got information, you got explanation, you got evidence, then you can use that word and talk about an opinion. Here you did not get evidence. Can I say in our opinion, we don't have opinion? No. So we do not express opinion on the aforesaid financials. Why? What happened? Because of significance of matter described in basis for disclaimer of opinion of our report. Basis for disclaimer of opinion section of our report. In that section, there is a discussion on matter. We have described a matter. Because of the significance effects of that matter, we decided not to give opinion. So because of that, we have not been able to obtain sufficient appropriate evidence to provide a basis for an audit opinion on the consolidated financial statements. Now, so this is opinion section wordings. Now you see, we understood which opinion to be given in which context. We understood definitions. We understood drafting part. Correct? So which means technically we have completed opinion section. Are you clear? We completed technically the opinion section. Title is completed, address is completed, opinion section is also completed. Now the next part is basis for opinion. The next part is what? Basis for opinion. So what is basis for opinion? You gave your opinion. Especially whenever you give a modified opinion, I want to know exactly why you modified. See, you gave adverse opinion, for example. For so and so reason you gave adverse opinion. But those reasons I may not consider. What appears material and pervasive to you may not appear material and pervasive for some investor. Agreed? For some investor, it may not appear material. Materiality and pervasiveness are relative terms. They are relative terms. For a conservative investor, qualified opinion is also a very big deal. For a very aggressive investor, with an investor with aggressive mindset, he just looks at, he reads the audit report, adverse opinion auditor gave. What is the reason he gave? He will see the basis for adverse opinion section. For these reasons and all, adverse, consolidation, subsidiary, not consolidated. Okay, how does it affect my decision making? He may think like, it is not that company is misleading something, right? They have not consolidated one subsidiary, because of which some misstatement happened here. Here it is technically it is not a wrong thing. Technically company is not misleading us. They did not consolidate one major subsidiary. I agree, it's a pervasive thing. Non-consolidation of subsidiary is a pervasive thing. I agree that. But that is not something that affects my decision making. So I will still invest in the company. So your adverse opinion may not affect my decision making process sometimes. Now I want to know why you gave adverse opinion, which means you must give reasons for adverse opinion, reasons for qualified opinion, reasons for disclaimer of opinion in the basis for opinion section, right? You must give reason, right? Then only I can understand why you gave adverse opinion, why you gave qualified opinion. Just blindly you said financials are wrong. You should tell me why it is wrong also. You cannot say blindly the financials are wrong. I will not accept. Correct? So basis for opinion section contains the information, the logic behind the opinion. Whatever opinion you give, for that there will be a reason here. Tell me, I will have a specific reason for opinion in case of qualified, in case of adverse, in case of disclaimer. I will have a specific reason. Will I have any specific reason why I gave unqualified opinion? Will I get any specific reason? Do I have any specific? Will I have any specific reason behind unqualified opinion? No. I gave unqualified opinion because everything is presented true and fair. Because wherever evidence I asked for, they gave me. All the items, accounting estimates are reasonable. Accounting policies are consistently followed. Changes in accounting policies are accounted and disclosed. Prior period items were correctly accounted. There are n number of reasons why I gave unqualified opinion. But there will be a specific reason why I will give qualified opinion, adverse opinion, disclaimer. Correct? Now tell me, suppose I gave unqualified opinion, what is the basis for unqualified opinion? You are asking me, what is the basis for unqualified? The basis is very simple. The basis is, we conducted our audit in accordance with the standards on auditing. And we are independent of the company in accordance with the code of ethics issued by ICI. And we complied. We have fulfilled our ethical responsibilities in accordance with the code of ethics. We are just telling people that you are asking me what is the basis for my opinion, right? Look, I gave unqualified opinion. For unqualified opinion, there is no specific reason. So I am telling them what? You look, I am doing audit as per standards. As per the standards, I have so many responsibilities. And we are independent of this company. We fulfilled our responsibilities. Whatever evidence we believe that the evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Whatever evidence, whatever we believe that evidence obtained by us is sufficient and appropriate. Based on the evidence, whatever we got, we assume that it is sufficient. We believe that it is sufficient. So, because of all these reasons, I gave unqualified opinion. Very clear. There is no specific reason. I cannot specifically point out and say why it is good. If I say bad, why it is bad, you should tell. If it is good, why it is good, we can't tell specifically, yes or no. That's it. So, and in this, no, you see, one more. Our responsibilities under those standards are further described in auditor responsibilities for audit of financial statements section of our report. In basis for opinion, first we started with the sentence. We conducted our audit as per standards on auditing. Under those standards, we have so many responsibilities. As on each and every standard has some responsibility, right? Suppose 210 standard says we are responsible to give engagement letter. SQC standard says we are responsible to establish quality control policies. 200 standard says we are responsible to obtain reasonable assurance and give opinion. 700 format says we are responsible to prepare audit report as per so and so format. Every standard is talking about some responsibility for the auditor. What are the responsibilities of auditor? Okay, don't worry. Our responsibilities under these standards, no, I specifically explained in another section of the audit report. In the same audit report, there is another section. Auditor responsibilities for audit of financial statement section. Auditor responsibilities for audit of financial statement section. You see, contents of audit report. Title, addressee, auditor's opinion, basis for opinion. Auditor responsibilities for audit of financial statements. Auditor's responsibilities for audit of financial statements is another section in the audit report. In that section, what are all our responsibilities under standards on auditing described? That point, where are we mentioning? Basis for opinion section, there we are mentioning it. In basis for opinion section, we are talking about responsibilities under various standards. And what are we saying? These responsibilities are further described in auditor responsibilities for audit of financial statement section of our report. We are independent of the company. We are simply telling them generally, look, I am independent of the company. I will do audit as per standards. What I will do as per standards? Look, go and see auditor responsibility section. You will understand what I will do audit as per various standards. I am independent of the company. I complied with code of ethics. Whatever evidence I obtained, I believe that it is sufficient and appropriate. Accordingly, I gave the above opinion. So this is what we tell generally. Now, suppose you give a qualified opinion. This point as it is will come. This point as it is will come. But the moment you give, whenever you give qualified opinion, side heading will be what? Basis for qualified opinion. So I will show you. Suppose I gave qualified opinion, for example, qualified opinion I gave illustration. Suppose I gave a qualified opinion. You see basis for opinion para? Basis for qualified opinion. The same para is continued, right? We conducted our audit as per standards on auditing. Our responsibilities are further described in. We believe that the evidence obtained as it is there, na? But not only that. Why you gave qualified opinion? At the beginning itself we mentioned. We gave at the beginning. In the example illustration, what we see, qualified opinion is given by auditor because of inventory misstatement. Let us assume inventory cost is 30 crore and NRV value is 28 crore. This is what the example we discussed, right? Now, 2 crore is the misstatement. Why there is a misstatement? Company is supposed to value inventory at 28, but they valued it 30. 2 crore is a misstatement. So that is the reason why we qualified, correct? Now we qualified in the opinion section. We said qualified opinion except for the effect of the matter described in basis for qualified opinion section of our report. The aforesaid financials are true and fair. What is that matter? The company's inventories are carried in balance sheet at 30 crore. Management had not stated inventories at lower of cost 30 and NRV 28 crore, but stated them solely at cost 30, which constitute a departure from accounting standard, which is a deviation from accounting standard. Not only that, see, we pointed out mistake. Not only pointing out mistake, you should also tell what if this mistake is not happened. What if this mistake is not happened? How the profit and loss account would be? How the position of the company will be? How much the tax liability will be? If this, because of this mistake, what and all items impacted? Quantification also we must do. What is it? Quantification also we must do. The company records indicate that had management stated inventories at lower of cost or NRV, an amount of 2 crore would be required to write the inventories down to their NRV. Accordingly, cost of sales will be increased by 2 crore. Income tax and net income and shareholders' pool would have been reduced by so and so amounts. See, we are not just saying that there is a mistake. We are also saying because of this mistake, what are all items affected, correct? So whenever you are giving qualified opinion, not only qualification, you should also quantify. You should also quantify the misstatement. What is its impact on the various elements of the financial statements? Understood? Now, in this way, if at all I explain the shareholder, they will get a better knowledge. Okay, if this mistake is not there, the profit would have been this much, the sales would have been this much, so and so they will understand better. Correct? But sometimes quantification is not possible. Sometimes quantification is not possible. For example, we discussed adverse opinion drafting, right? In this example, why we gave adverse opinion on consolidated financials? Because one material subsidiary, they didn't consolidate. They did not consolidated one material subsidiary. Non-consolidation of subsidiary, in this case, they assumed it is not only material, but also pervasive. So what they gave, they concluded adverse opinion is appropriate. Now you see, okay, I want to give adverse opinion, and in the basis for adverse opinion, look at the basis for adverse opinion. Basis for adverse opinion, you see, there is one explanation why they exactly gave adverse opinion, correct? And another explanation is general para. What is the basis for your opinion? Generally, what basis? You do audit as per standards, you have responsibilities, you are ethical, you are independent of the company, you fulfilled ethical responsibilities, you believe that your evidence is sufficient and appropriate. You generally talk about your audit, but specifically you also talk about why you gave adverse opinion. Yes or no? As explained in note number 10, the group has not consolidated XYZ subsidiary which the group acquired in so and so year because it has not yet been able to determine fair values of material assets and liabilities as on acquisition date. So and so reason is that because of that they have not consolidated. They qualified. I mean, they gave the reason. Not only giving the reason, you should also quantify, no? Because of non-consolidation, what are all items in the balance sheet and P&L are affected? Should you, are you required to tell or not? Are you required to talk about the impact of this or not? Now tell me, if I do not consolidate the subsidiary, which item of profit and loss account, purchases or sales or expense or employee benefit expense or depreciation, which will affect? Everything will affect. Every item of P&L will affect. Every item of balance sheet will affect. Now tell me, is that quantification possible? Is that quantification? Suppose in the previous example, inventory is misstated, I can clear little what are all 4 or 5 items are there that affected. But if I do not consolidate, what should I sit and prepare consolidated financials and tell here? That's not my duty. Sometimes quantification is not possible, impracticable. That is what in the question they said. You see, the effect of the misstatement of consolidation have not been determined because it is not practicable to do so. In that case, what you have to do, you have to do, had the company consolidated, many elements could have been affected. The effect on consolidated financials of failure has not been determined. We are openly telling that what is its impact we are not able to determine. So if you are able to determine, tell the quantification. If you are unable to quantify, say that you are unable to quantify. Are you clear? All of you? Yes. Now look at disclaimer of opinion, how basis for opinion paragraph changes. Disclaimer of opinion, illustration 4 in the ICA 705 standard. Illustration 4 in 705 standard, use a disclaimer. First disclaimer of opinion, we were engaged to audit, all that is over. Basis for disclaimer, you see there is only one pair here. We just straight away discussed why we gave disclaimer of opinion. We did not discuss. We conducted our audit as per standards on auditing, that point and all we didn't. Why? Because we didn't conduct, no? If at all you are giving opinion, we want to know what is the basis of your opinion. Disclaimer of opinion means what? You are not giving opinion. When you are not giving opinion, I just want to know why you have not given opinion. Technically, see, when you give adverse opinion, when you give qualified opinion, when you give unqualified opinion, I want to know on what basis you gave this opinion and why you gave adverse opinion, qualified opinion also I want to know. That's why qualified opinion, adverse opinion will have 2 paragraphs. Basis for qualified opinion, basis for adverse opinion will have 2 paragraphs. One paragraph is why you give qualified opinion and how you generally give opinion. In case of disclaimer, you have not given any opinion. In that case, how do you give your opinion? Do I want to know? No need. But you didn't give opinion. No, I want to know exactly why you didn't give opinion. So that's why you are just giving reason here why you did not give opinion. That para is there, na? Our response, we conducted our audit as per standards on auditing. Our responsibilities under those standards are further described in auditor's responsibilities for financial statements. We are independent of the company. We comply with code of ethics. That and all not required. That and all not required. Easy. All of you. Now you see in our book there are some, there is a discussion. 705. Okay, first, what are the contents in basis for opinion? What are the contents in basis for opinion? The auditor report shall include a section directly following a opinion section. What heading? Basis for opinion. In that, what points you should state? State that audit was conducted as per standards. Refer to the section that describes auditor responsibilities. In that para, you should talk about where auditor responsibilities are clearly explained. Include a statement that you are independent of the entity and has fulfilled other ethical responsibilities. State that auditor believes the evidence obtained by him is sufficient and appropriate. These are the points you should mention right clearly whenever you are giving basis for opinion. Now, how this basis for opinion section modifies whenever we are giving modified opinion, that is explained in 705. This is the point which many don't understand. 705. Yes, description of basis for opinion para in case of modified opinion. How basis for opinion para description will change when we give modified opinion. Suppose if there is a material misstatement in financials, what we need to do? Qualify. We not only qualify, we should also, the auditor shall include in the basis for opinion a description and quantification of financial effect of the misstatement unless impracticable. You should also quantify, not only qualify, you should also quantify. Suppose, no, sir, I am unable to quantify. What should I do? If it is not practicable to quantify, state that you are unable to determine. Have you seen that or not? The effect of non-consolidation has not been determined. It is not practicable to determine. State that it is not possible to determine the impact. Suppose, no, see, not only misstatements are not only in the type of this. Sometimes misstatement can be in the form of disclosure, right? Misstatement in narrative disclosure. What is misstatement in narrative disclosure? In financial statements, balance sheet, P&L, notes is there. Inside that notes, at the starting 3-4 pages of any company notes, will have accounting policy discussion. How company is doing revenue recognition, they will discuss some paragraphs will be there. That paragraphs company is misleading. The company is describing the paragraphs wrongly. Now here, misstatement, is it in amount? No. Is it in classification? No. It's in disclosure. Which disclosure, by the way? Quantitative disclosure or narrative disclosure? Narrative disclosure. Suppose if the misstatement is in the form of a narrative disclosure, what auditor has to do? How auditor has to do? Of course, we qualify. We qualify or give adverse opinion depending upon the pervasiveness. But how will you describe the same in basis for qualified opinion? How will you describe it? If there is a material misstatement in financials that relate to narrative disclosure, the auditor shall include in basis for opinion an explanation of how the disclosure is misstated. In nothing but so and so note number, so and so point is disclosed like this, but that is not correct. The right disclosure is this. Like that you will mention. You will disclose that sentence in your audit report. Under which section? Basis for qualified opinion or adverse opinion, whatever it is. Suppose financial statements are not disclosing something. It is not narrative disclosure. Forget about it. They are not disclosing itself. Now tell me, when the financials are not disclosing something which is material, what auditor has to do? Qualify. First, auditor has to qualify. Before qualifying, generally what we do? We discuss with the management. Sir, you forgot to disclose so and so. As per accounting standard, it's mandatory. So you didn't disclose. We'll discuss. Management did not agree to disclose. Then what I will finally do? I will give qualified opinion or adverse opinion depending upon the severity involved, depending upon the pervasiveness. Now, okay, I decided to give adverse opinion or qualified opinion, whatever it is. Basis for qualified opinion, basis for adverse opinion. I should talk about the non-disclosure, right? If practicable, whatever they omitted, no. Whatever they didn't disclose in the notes to accounts, right? Entirely you disclose it here in the audit report. Where you should disclose? Basis for qualified opinion, basis for adverse opinion. Can I disclose it under emphasis of matter paragraph? Emphasis of matter paragraph is not a substitute for disclosure in financial statements. You might have heard it. So you disclose it in this one. Any of this itself can be asked as a 3 marks question. What is the auditor's reporting requirement in case of material misstatement by way of non-disclosure? First, if the non-disclosure is material but not pervasive, auditor will give qualified opinion. If it is material and pervasive, auditor will give adverse opinion. Further, under the basis for opinion section, the auditor shall describe nature of omitted information. What exactly omitted? Auditor shall describe. Unless prohibited, include the omitted disclosure if it is practicable to do so, and auditor got sufficient appropriate evidence regarding omitted. Suppose, segment reporting, segment reporting, accounting standard 17. Yes, sir. So company has to give segment information. They didn't disclose. Segment information itself they don't know about that. They didn't discuss anything about segment information. Now what you should do? If it is practicable, you design segment information. Get sufficient appropriate evidence about the accuracy of the segment information, then copy paste it in the basis for opinion section. Generally, if that is a very big item, very big disclosure which they didn't disclose, it is not possible for us to sit and develop that. So generally we don't mention it, we just qualify that. It is not practicable, we will say. Clear? Suppose you are giving modified opinion because you are unable to obtain evidence. If modification is resulting from inability to obtain evidence, the auditor shall include in the basis for opinion the reasons for the inability. Why you didn't get the evidence? Who stopped you giving the evidence? You should discuss that. Further, in case of disclaimer of opinion, just now we have seen how basis for opinion section modified. In that, are we mentioning about we conducted our audit as per standards on auditing? we are ethical, we are independent of the company, we have complied with ethical complaints, we believe that the evidence is sufficient appropriate. Are we discussing this in basis for disclaimer of opinion whenever we give a disclaimer of opinion? No. The auditor shall not include the following elements. The auditor shall not include the following elements in basis for disclaimer of opinion section, because auditor gave disclaimer. What you should not include? A reference to auditor's responsibility section, a statement that you have obtained sufficient and appropriate evidence. Generally, in every basis for opinion section, we believe that the evidence obtained by us is sufficient and appropriate. We mentioned that. But that statement you should not include when you are giving basis for disclaimer of opinion. Next. Now that we completed, basis for opinion discussion is over. Easy? All of you? So now, so with this, basis for opinion is also over. Basis for opinion is also over. I will come back to it later. My remaining items I'll come back to it later slowly. So basis for opinion is also over. We understood what exactly, how it works, basis for opinion, how it works, all that. Right now I will show you how an MCQ can be framed using Google Gemini or ChatGPT. I think yesterday, previous class also I thought of doing it, but I missed. Before you, I'll do right now. So what's the page number here? It is basis for opinion, page number is some 60, I think so. Yeah. So this is actually something like ChatGPT. So I pasted entire that basis for modified opinion section. How basis for opinion section, how it gets modified in different circumstances. Okay. So I just posted that message. Now it will give some understanding. Forget about that. So I will ask it, develop a case study to test our TA inter students writing auditing exam September 2024. Please give a case study question of 25 lines and 5 MCQs with 4 options each. Yes, case study. You are the auditor of XYZ manufacturing company engaged in production of automobile components. Is this how RTP questions look like? The company has a significant export market and operates in a highly competitive industry. During the course of your audit, you observe the following. The company has implemented a new ERP system in the current year. There has been a significant increase in inventory turnover ratio. The company has adopted a new accounting policy for revenue recognition. I think no. I think this was not completely drafted. We need to put little more detailed in this one. Okay, fine. I'll give one more question. I think the prompt is not fully clear. So we should give prompt very clearly. I want case study on basis for opinion para. When auditor gives modified opinion. Please give a detailed case study question. Sometimes now we have to ask 2-3 times the prompt. Again, it is giving the same. Huh? Yeah, now I think it came correctly somewhat. You are the partner in charge of XYZ Limited, a publicly listed company engaged in manufacturing and distribution of consumer electronics. The company has been operating for past 15 years and has a significant market share. Due to increasing competition and rapid technological advancement, the company has been facing challenges in maintaining a profit margin. Findings. During the course of audit for the year ended 31st March 2024, you encountered the following. The company acquired a subsidiary 5 years ago. Due to decline in subsidiary's profitability and market share, the auditor concluded that goodwill associated with the acquisition may be impaired. The management has performed an impairment test and recorded an impairment loss of 50 crore. The company has entered into related party transactions related party transaction with the newly formed entity ABC Private Limited, which is controlled by family. These transactions include sale of inventory. I think they are only pointing issues. They are not talking. I mean, in this case study, they are not talking about material misstatements. So in that case, we should type one more time, which means probably the matter which we gave is not sufficient. Assume there are material misstatements. Assume there are material misstatements in the above case study. Draft a revised case study which contain material misstatements. Material misstatements. Okay, we'll see how it will draft. Appa, now it came perfectly. The company acquired a subsidiary 5 years ago, right? The auditor concluded that goodwill is get impaired. Management, no, they did impairment test and they considered the loss as 50 crore. However, the auditor's subsequent procedure revealed that impairment loss was understated by 15 crore. The related party transactions have given something. The auditor discovered that certain related party transactions were not recorded. Going concern. Furthermore, the company has not made disclosure about going concern. Inventory. Subsequent testing revealed that the company has overstated inventory by 20 crore. Perfect. So we should appreciate that also. Otherwise, it will not give right question. Perfect. Now give me 5 MCQs asking type of opinion and requirements on basis for opinion. Give me 5 MCQs asking type of opinion and requirement of basis for opinion to test my TA into students. No, otherwise, no, it won't exactly understand the context. So give me five MCQs with 4 options each. You know, there is a course called prompt engineering course. MCQs. Some might come, you see. An auditor concluded that there is a material uncertainty about entity's ability to continue as a going concern. I think a going concern point is, I think, no, what we should do is, we should copy this first. This response is there, right? This response is there, right? This first we should copy. So this is a case study, right? Yeah. So now here I will copy my previous question. So they gave this case study. Now I have asked the question, right? So now give me 4 MCQs. For this case study, as a continuation, I will ask. I don't know whether now it will ask correctly or not. Now it you see. Given the material misstatement in inventory valuation and revenue recognition, what type of opinion auditor will issue? Due to pervasiveness of the effect of material misstatement, what type of opinion? Pervasiveness. In case of qualified opinion due to material misstatement in inventory valuation, what should be the basis for opinion paragraph shall include? At this point, I think we can see, no, inventory has been overstated, right? In case of qualified opinion due to MMS in inventory, what should be the basis for opinion paragraph? Include. What shall it include? A description on scope of limitation? No. A description of nature and the effect of the misstatement. I think this is correct. Third option, a reference to the note to the financials explaining the misstatement. Both B and C. A reference to the note of the financials explaining. Probably no. I will even refer to the note point which actually talks about misstatement. That also I can refer. When I'm qualifying, no, I can refer even to that also. So I will select D. B answer is perfectly right. I need to talk about nature of misstatement and effect also. Quantification means what? Effect. So I think if at all we study that entire case and see, we can get the correct answers here. Understood how we developed? Exactly, I guess ICS using this pattern only. But remember, now suppose if I put the same question again, the exact question may not come. Another question it will be generating. If I test 10 times, I will be getting only once or twice the repeated question. 8 to 9 times it will come a new question. So 80% of the times it will generate a new case study. You see how beautiful the case study is? Even the case study is very good. Related party transactions, they were not correctly valued, they are not correctly disclosed. Going concern, some issue is there. Inventory valuation is there. Revenue recognition, the company recognized revenue on certain long-term contracts before the performance obligations were satisfied. Revenue recognition, when you can recognize, only when you satisfy the obligation you can recognize. So revenue recognition was wrong. It's a material misstatement. This premature revenue recognition has materially overstated the revenue and profits because you are recognizing the revenue in advanced stage. It is overstating the performance. This is a material misstatement, right? Now, in that context, it gives some MCQs. So you can also ask for answers. Answers, please. It will give answers also. And reason also it will give. First one, adverse opinion. Due to multiple material misstatements affecting different areas. Adverse opinion. What is the first MCQ? Given the misstatements of inventory valuation and revenue recognition, what type of opinion? Since both the cases material misstatements were there, multiple areas are affecting, the impact is going to be pervasive. That assumption it took, and which opinion it gave? Adverse opinion. Second one, Due to pervasive effect of the MMS in the financial statements, what type of opinion? Obviously, pervasive effect of the MMS, adverse. In case of qualified opinion due to MMS, MCQ3, already we solved, no? Option number D, yeah, D, both. B and C. Basis for opinion should describe nature and effect of the misstatement and reference to the note of the financials for further explanation. Understood how it is framing? In fact, this is a bit simple topic. You take a very complicated topic and ask it to develop a case study, it will give you a superb case study. Technically, auditing subject is something that you can study on your own. You don't require classes and all. Provided what is required is courage is required. So you can use ChatGPT and Gemini, all that, and then you can do self-study. But I can give you better than that. Correct? Yes. Obviously, no? Thank you. So next. So understood all of you until now, basis for opinion section? So we completed that. Now let's understand emphasis of matter paragraph. Let's understand emphasis of matter paragraph. I'll show you Tata Motors. This is the financial statements, right? This is the financial statements. These are the financial statements of Tata Motors. You see, this is completely notes to accounts. Whatever I'm showing you is completely notes to accounts. So lengthy, you see. How many pages is there notes to accounts? Almost 70-80 pages. Now tell me, as an auditor, should I read entire balance sheet P&L notes fully or on a sampling basis? Hey, notes to accounts, you should read fully. You should sign no. How audit verification of items of financials you can do on a sampling basis. How come I will read on notes to accounts on a sample basis? I should check presentation and disclosure requirement clearly, no? I should check whether the financial reporting framework presentation disclosure exactly followed or not, right? Hardly total entire balance sheet, P&L, notes, everything put together will be 100 pages. In that, how will you do sampling? First of all, how sampling is possible? You want to read balance sheet. Suppose you want to understand notes to accounts, some expenditure, some P&L account you want to understand, revenue from operation. Unless you come and see notes to account, revenue from operation breakup, you can't understand whether it is correct or not, right? So sampling is not possible in interpretation of financial statements. Whether financial statements are prepared as per applicable financial reporting framework, that you cannot do sampling. 100% you have to read, correct? But tell me, will a shareholder read this financial statements 100%? Can they read and understand? We only don't understand. How come shareholders will understand? You may see capital management, some point is there, some random point I'm just taking. The company's capital management is intended to create value for the shareholder by facilitating the meeting of long-term and short-term goals of the company. The company determines the amount of capital required on the basis of annual operational plans and long-term product and other strategic investment. The moment you read this is not important for exams and you leave it. You don't understand, no. It's not that easy to understand the financial statements unless you have the knowledge of Ind AS, holistic understanding of the subject. Only then you will understand any company notes to accounts clearly. Otherwise you can't understand. Some note points, no. Commitments. What is this? The company has entered into various contracts with vendors and contractors for the acquisition of plant and machinery and various civil contracts which are yet to be executed. Under the joint venture agreements with the so and so company, the company is committed to contribute some so and so crore as on so and so date. You see, all these points you can understand only when you exactly understand the standard implications, why this is presented, in what context it is presented, how this is useful for the people. So normal layman, normal shareholder and all cannot read notes to accounts. They won't even open financial statements. They only see in the stock market, brief summary will be there, financial summary will be there. In Money Control app or Zero the app, in all these cases some summary will be there, financial summary. That alone they'll see. This financial summary is derived by these applications from audited financial statements. So people generally knows that the summary is generally taken from audited. They just see the summary and accordingly they decide. So they definitely don't read. But as an auditor, you don't have this luxury. You have to read 100%. Now when you're reading 70-80 pages notes, somewhere definitely you would have felt, so and so note number 55, is very important point. Won't you? Generally, when we are reading entire notes to accounts, we auditors generally feel, this is very important. I think every shareholder should come and read this point. Whether they read entire notes or not, ignore, forget about it. This note number 55, which talks about contingencies, this one is note number 41, huh? Yeah, 41 only. This number is what? Note number 41, which talks about contingent liabilities discussion. What are all contingent liabilities the company is facing? I want every shareholder to read this particular point. By the way, I want everybody to read this point. I'm saying no. Does it mean, is this materially misstated? No, it is not materially misstated. Then why I want this everyone to be read? So that they can understand better about financial performance and position of the entity. For their better understanding of the financial statements, I want everyone to read this point. I want to tell this in the audit report. How can I tell? Emphasis of matter paragraph. Emphasis means what? Highlight. Emphasize means what? Highlight. These two lights are emphasizing me, yes or no? Emphasis is what? Highlight. So emphasis of matter paragraph is a paragraph in the auditor's report. Is a paragraph in the auditor's report that refers to a matter that is appropriately presented or disclosed in financial statements. You see the definition, emphasis of matter paragraph. What is emphasis of matter paragraph? Emphasis of matter paragraph is a paragraph included in auditor's report that refers to a matter. You see the word cleverly they used. Appropriately. Appropriately means what? Rightly. Which means, suppose Tata Motors note number 41. The note number 41 contains material mistakes. They are not disclosing correctly the contingencies commitments. They are using wrong amounts and all. Can I highlight that under emphasis of matter paragraph? I should not. Because that note number 41 is not appropriately presented or disclosed. Then I can highlight under emphasis of matter paragraph only those that are appropriately presented or disclosed in financial statements. In auditor's judgment is of such importance that it is fundamental for users' understanding of. If I feel they are fundamental for users' understanding of financials, I will highlight them. Otherwise, I will not highlight them. As simple as such. That too, if I have to highlight them, that must be presented appropriately. Now you see, usage of emphasis. When it should be, when I can use emphasis can be used to draw attention to the matter which is important for users' understanding. And this shall be included, provided. This emphasis can be included only when the auditor would not be required to modify the opinion. On that matter, no, 41st point, no, I don't have any objection. Then only I can highlight it. Suppose if I feel that 41st point is materially misstated. If I feel the 41st point is materially misstated, I will not highlight it. If it is materially misstated, what shall I do? I should give qualified opinion or adverse opinion. In the opinion section, I should talk. I cannot cleverly ignore there and talk in emphasis of matter paragraph. Because emphasis of matter paragraph, by definition, people think, something auditor is highlighting. Nothing wrong in that. He just highlighting it. But qualified opinion means auditor is objecting something. There is a difference between highlighting something and objecting something. Correct? Yes, sir. So, further, if at all that is determined as a key audit matter, don't discuss it under emphasis of matter. So, if at all you are communicating some point as a key audit matter, don't discuss the same under emphasis of matter paragraph. Clear? What is the manner of presentation? How emphasis of matter paragraph will be presented? I'll show you Air India audit report for your understanding. How emphasis of matter paragraph is presented. This is Air India, the old audit report, 1920 audit report. You see here they have used emphasis of matter. How they presented emphasis of matter paragraph? As a separate section, right? In a separate section they presented, right? Separate side heading they gave, separate section. They are not discussing this under opinion. They are not discussing this under basis for opinion. No, nothing. They are discussing it as a separate section with a heading emphasis of matter. Then auditor is drawing attention to so and so points. Why auditor is highlighting all these points? Because these points contain some important information. To whom it is important? Users. Who felt it is important? Auditor felt it is important. By the way, is auditor modifying on these matters? That's why at the end of the matter, our opinion is not modified in respect of the above matters. So that is a manner of presentation of emphasis of matter paragraph. You see, the manner of presentation is what? include a paragraph within a separate section of the auditor's report, express the matter emphasized, give reference to such matter in the financials, state that your opinion is not modified in respect of the above. By the way, the emphasis of matter paragraph is not a substitute for disclosure in financials, not a substitute for 570 material uncertainty. This is not a substitute for various mistakes. If you don't disclose something in financials, I will give modified opinion. Are you getting it? Emphasis is not a substitute for modified opinion. Confident. So that's about emphasis of matter paragraph. Now we have other matter paragraph discussion. So, but other matter paragraph discussion takes little time. Okay, we will take a break and then come back and discuss. Confident all of you until now? That's it. Okay, we'll take a break, 20 minutes. So let's continue the discussion on 706. Emphasis of matter paragraph is completed, and now we have to discuss other matter paragraph. So what is other matter paragraph? You see the definition. There is only a slight modification between emphasis and other matter paragraph in terms of definition, but the concept is extremely different. Other matter paragraph is a paragraph included in auditor's report that refers to a matter other than those presented or disclosed in financial statements. So if at all you are referring, see, emphasis of matter paragraph definition, you see, it's a paragraph in the auditor's report that refers to a matter appropriately presented or disclosed in financial statements. So that refers to a matter appropriately presented or disclosed in financial statements. Other matter paragraph is a paragraph in the auditor's report that refers to a matter other than those presented or disclosed in financial statements, that in auditor's judgment, it is important for the users to understand audit, to understand auditor's responsibilities, to understand auditor's report. In order to make the users understand about the audit, auditor's responsibilities, auditor's report, I use other matter paragraph. If I want people to understand better about the financial statements, I will use emphasis of matter paragraph. So in both the cases, one paragraph is dealing with where I will highlight about important point in financials which I feel they're important for better understanding. Whereas in other matter paragraph, I talk about audit, I talk about auditor's responsibilities, I talk about auditor's report. Getting it? To make them understand better on these aspects, which are not presented or disclosed in financial statements. For example, a simple example I'll take, my favorite example. Suppose, take State Bank of India, best example. State Bank of India Limited itself, SBI Limited itself. SBI Limited. State Bank of SBI Limited is a bank, first of all. It has so many subsidiaries. One of the subsidiaries is SBI Cards Limited. SBI Card Limited, which is dealing with credit card division, which is exactly dealing with what? Credit cards division of the entire State Bank of India is dealt by SBI Cards. Now SBI Card is a holding company, SBI Limited Bank is a holding company, whereas SBI Card is a subsidiary company. Now SBI Limited is being audited by, let us assume, Mr. H. H is the auditor. H means holding company auditor, that's what the meaning. Whereas SBI Card Limited, which is audited by S. S is the auditor of SBI Cards, H is the auditor of SBI Limited. Now SBI Limited, this has subsidiary company, right? Along with this, SBI Limited also has branches. It has branches, 25,000 branches it has. Across India, how many branches it has? 25,000 branches, approximate number I'm telling you. Out of this, 9,000 branches were audited by branch auditors. 9,000 branches were audited by branch auditors. Remaining balancing figure, remaining branches were unaudited. There is no audit requirement for them. Now, State Bank of India, you see, banks, public sector banks, they maintain accounting records at each branch. A branch related accounting records are maintained inside the branch only. Private sector banks, they don't maintain branch wise accounts. They maintain centralized accounts. That's why ICICI Bank, Kotak Mahindra Bank, HDFC Bank, these are all private sector banks, will not have branch audit concept. Whereas public sector banks have a branch audit concept, because most of the public sector banks maintain accounting at branches itself. When branch accounts are separately maintained, the branch has to be separately audited, general rule. General rule I'm telling you. Or it can be audited by same person also, no problem. But generally in banks, no, RBI gave a guidelines saying the branches has to be audited by separate auditors. How many? Single auditor can he do audit of 9,000 branches in State Bank of India Limited and its corporate offices, investment offices, marketing offices, so many will be there. How come a single auditor can audit all this? Further, State Bank of India, I said right, Mr. H is the auditor. H is nothing but holding company auditors. That's what the meaning. H is nothing but main company full auditors. H means nothing but was full company main auditors. We call them as principal auditors. We call them as what? Principal auditor. Let's redefine the name from H to P. They are actually what? Principal auditors of State Bank of India Limited, and they are the holding company auditors. From subsidiary company point of view, they are holding company auditors. Now, State Bank of India is having totally 12 joint auditors. How many? 12 joint auditors. They have principal auditors are close to 12. Now and these branches, these 9,000 branches are audited by approximately 9,000 branch auditors. Now, what is exactly this principal auditor, branch auditor, all that concept is about? Now, by the way, State Bank of India will prepare financial statements, right? How many sets they will prepare? 2 sets of financials they will prepare. One set of financial is standalone financials, where head office plus all branches will be consolidated, correct? Head office plus all branches combined picture is what called as what? Standalone financials of SBI Limited. And they also prepare what? Consolidated financials. Inside this what? SBI Limited plus all subsidiary companies plus associate companies plus joint ventures. All put together we will prepare group financials. That's called consolidated financials. Now principal auditor, who are nothing but these 12 joint auditors, should give audit report on consolidated financials, should also give audit report on standalone financials. Okay. Principal auditors, we are 12 joint auditors, right? We are principal auditor, right? I am the auditor of State Bank of India. I will have to give audit report on consolidated financials. But these consolidated financials includes various subsidiaries, associates, joint ventures, which are audited by other auditors, correct? Which are audited by subsidiary company auditors, associate company auditors, joint venture auditors. We are not auditing them. They are auditing that. Now, whatever subsidiary, joint venture, branch they are auditing, no, but that balance sheet is included in consolidated financials. On that I have to give opinion, but I didn't audit them, no. How can I give opinion on consolidated balance sheet which contains assets and liabilities belonging to subsidiaries, joint venture, all this is called as component. What are they called as? Components. From consolidated financials, holding company plus remaining components. Component means what? It can be subsidiary, it can be associate, or it can be joint venture. So holding company plus components combined put together is called consolidated financials. But I am not auditing component financials. Component financials are audited by other auditors. Now how can I give opinion on this? You have to give opinion. But you are not responsible for other auditors, right? You are not responsible for component financial statements, yes or no? Then how come you give opinion on overall consolidated financials which include financial information of components? How come you give? Because you are relying upon their reports. Components are audited by just like you chartered accountants, right? They are also COPs, chartered accountants with the COP auditors, statutory auditors, right? Your report is trusted by others, no? Same way you also trust your fellow members' reports. No problem. So you look at other auditors' reports, component auditors' reports, on other subsidiary companies, all that. They are also true and fair. And what is your opinion on SBI, which you audited? That is also true and fair. True and fair plus true and fair. What opinion you will give on consolidated? True and fair. But this point shareholders don't know. They will think I only audited all the subsidiaries. I should tell to the shareholders that components are not audited by me. Components are audited by other auditors, component auditors. Where should I tell that? Other matter paragraph. Where should I tell that? Other matter paragraph. In other matter paragraph, other matter paragraph in the audit report on consolidated financials, I will talk about components. Same way, standalone financials. Head office I have audited. Head office I am auditing. But branches are audited by branch auditors. But these branches related assets and liabilities, income and expenses are all included in standalone financials. In the standalone financials, no, branch related assets and liabilities, branch incomes and expenses, they are also included. But on standalone financials, my report only should be given. My opinion only should be given. I should only give opinion. And my report only will go to the public. Branches and all were audited by other auditors. No. I don't know anything about the branches. Then how come I give opinion on standalone financials? Use branch auditors report. They said everything is true and fair, right? You also consider it as true and fair and give opinion. You also consider it as true and fair and then give opinion on the total standalone. But tell the public that you didn't audit 9,000 branches. Branches were audited by another auditor. Your opinion on these total financials, which includes branch data. Your opinion on total financial statements, which includes branch assets, liabilities, incomes and expenses. How your opinion is based upon? Your opinion is based upon branch auditor's report. That fact you mentioned. Enough. Division of responsibility. Are you clear? From standalone financials point of view, component means branches and divisions. Consolidated financial statements point of view, component means subsidiary, associate and joint venture. In consolidated financials, component means other entities. In standalone financials, component means other branches and divisions. That is why you have a question, you have a concept called branch accounts and audit discussion. Inside that, who is a principal auditor, who is another auditor, who is a component auditor, like that there is a discussion. You see that discussion I will show you. So you have a discussion on branch accounts and audit. You see here, audit of branch office accounts is there now. Inside that you see one of the point is SA 600 related discussion. Who is the principal auditor? Principal auditor means auditor with responsibility for reporting on financial information of entity. When that financial information includes financial information of components audited by another auditor. So you are the auditor with a responsibility to report on the enterprise entity, which includes financial information of components audited by other auditor. Who is other auditor? Other auditor means an auditor other than principal auditor. What is his responsibility? He will have responsibility for reporting on information of a component which is included in financial information audited by principal auditor. What is a component? It can be a division or branch. Division or branch is a component when which financials point of view? Standalone. Subsidiary, joint venture and associates. These are components from which financials point of view? Consolidated. So whether it is a division or branch or whether it is a subsidiary, joint venture, associate, whose financial information is included in financial information audited by principal auditor. That's how the definitions are drafted. Understood? You read without understanding anything, you will never remember. So this is the definitions which are drafted, branch accounts. Now tell me, okay, fine, principal auditor, other auditor, branch, all that we understood. What is like using the work of another auditor? Using the work of another auditor. Inside that, the F point is important. This itself can be asked as a 3 marks question. What are principal auditors' procedures? What are principal auditors' procedures? Is actually nothing but what? What are principal auditor procedures? In the context of SA 600, actually full SA 600 we don't have in syllabus. It is there only in CA final. Here we are only discussing brief discussion of SA 600, not in depth. You know, principal auditor should advise the other auditor how he is going to use the other auditor's work. Coordination. Tell me, when I am doing audit of State Bank of India, I should tell all the subsidiary company auditors, look, if you complete your audit and give audit report, then only I can give my audit report on consolidated financials. Same way, I should tell to all the 9,000 branch auditors, look, only when you complete branch audit and give me the audit report, then only I can give my audit report on standalone financial statements. So I should advise the other auditor how their work is going to be used by me. The principal auditor will inform the other auditor any matters that are requiring special considerations. I will tell them focus on these areas, focus on those areas. I will give them based on my understanding of the entity and the environment. I will tell the other auditors these are all important areas, please focus on that. I will tell subsidiary company auditors these are all important areas, please focus on. And I will also advise, I will also explain other auditors how to identify intercomponent transactions and timetable for completion of audit, and I will advise other auditors any significant reporting requirements and representations as to compliance with them. I will tell them what are all reporting requirements applicable for this company. I should tell them because they may not know. They are only branch auditor. They don't know exactly what are all they need to report. So I should tell them, look, this is a company, CARO is applicable. So you also give a CARO report. I should tell them. Now I will get a representation that yes, they complied with it. Whatever requirements, whatever procedures I told them to do, right? I will get a representation from them that yes, they did all that. Clear. These are called as what? Principal auditor's procedure. The principal auditor might discuss with other auditor. The procedure supplied a review of written summary of other auditor's procedure. I will discuss with him what are all works he did, or I will get a written summary of what are all works he did. Generally, this we don't do. If other auditor is also a chartered accountant having COP, suppose if other auditor is not a CA in India, suppose the other auditor, the component, the branch is a foreign branch, and the foreign branch is audited by some external CA, not Indian CA. In that case, I will ask him what are all he did, all that. The principal auditor may also visit other auditor. The principal auditor may also visit other auditor. If I want to visit. Now you see, I might discuss with other auditor. I will perform these coordination works and all. No, all this depends upon the nature, timing, and extent of these procedures depend upon circumstances of the engagement and my knowledge of competence of other auditor. To what extent I will discuss with him, to what extent I will interact with him, to what extent I will direct him, how I will get a representation from him, the involvement with him. It depends upon circumstances. It also depends upon my knowledge of his competence. If at all he is a CA and COP, I don't discuss anything. I just simply tell him, please finish audit by so and so time and give me the report. Finally, he'll give the report. I'll use it and then give my report. This is what I do if the other auditor is also a CA and COP. If the other auditor is CA, but he is not a CA, he is not an Indian CA, I don't know how he will do the audit. I don't know what standards he is following. I don't know what reporting requirements is following. I don't know. In that case, what I should tell him, look, this is an Indian company requiring these reportings. Okay, you have to do audit as per standards on auditing. Show me whether you did audit as per standards on auditing. Like that I will be discussing when the other auditor is not an Indian CA. Because if he is not an Indian CA, how do I know his competence? Are you getting it? So that is the logic behind this entire discussion. Now tell me, first of all, should a company maintain separate books of accounts for branches? No compulsion. It is company's option whether they want to maintain separate books of accounts for branches or not. That is their choice. 99% of the cases, companies maintain centralized accounting. Reliance Industries will have centralized accounting. They don't have branch accounts. Avenue Supermart, DMart, they don't have branch accounts. Many insurance companies don't have branch accounts. Private sector banks don't have branch accounts. Branch accounts is not a popular concept in reality because today entire accounting is centralized. Business may be happening at branches. Suppose ICICI Bank, Kotak branch is there, Kotak Mahindra Bank is there. It has branches within the Chennai, some 10 branches are there. But accounts are not maintained at branch. At a branch, what is happening? Transactions are only happening, but not accounting. Accounting is centralized in private sector banks. So having a compulsory branch accounts is not a big deal. It is not compulsory. But if at all a company is maintaining separate accounts for branches, who should audit those accounts? Same auditor. Company auditor, whoever is then a principal auditor, he himself can do audit. Or a company can appoint a separate auditor for branches who shall also be a chartered accountant having a certificate of practice. Suppose what if the branch is outside India? Same company auditor only shall audit. If nobody is appointed separately, the main auditor only has to go and audit the branch accounts also. Suppose if a company decided to appoint a separate CA having COP, company can appoint a separate CA and send outside India and do audit income. Or company can appoint an auditor as per the law of the nation. As per the law in that country, whatever the country law is there, no, as per that they can appoint the branch auditor. Any of them can be appointed as a branch auditor in case if the branch is situated abroad. Getting it? So that is what, who can audit company auditor or another CA in case of foreign branch by any person duly qualified to act as a auditor as per law of that country. Now branch auditor shall prepare report on the accounts of the branches examined and send it to the auditor of the main auditor of the company, principal auditor of the company. Now with respect to branch audit, what are the responsibilities under SA 600? With respect to component audit, what are the responsibilities? That is what we covered at the beginning. Understood? I briefly discussed this point. That's enough. Whatever I have discussed is more than enough, sufficient. Now where are we actually? 706, other matter paragraph. So other matter paragraph is referring to, other matter paragraph is a paragraph in the audit report that refers to a matter other than presented or disclosed in financial statements that in auditor's judgment is important for users' understanding of the audit, auditor's responsibility, auditor's report. Auditor's responsibility we understood. Correct? Other matter paragraph is important to make the users understand audit and auditor report. These two words are pending again. Now, understood until now? Let's look at the 299 standard joint audit. Let's look at the 299 standard joint audit. What is a joint audit? Appointment of two or more than two audit firms for the same entity, for the same financial year, with the same scope of work. Correct? Scope is same. I am the auditor for full company, you are also the auditor for full company. We both are principal auditors only. When the scope of work is same, we are called as what? Joint auditors. For a particular branch also joint audit is possible. Suppose I appointed you as an auditor for branch A, which is very big. Another auditor is also appointed for branch A. You both of them are having scope same, which is branch A. Branch A financials have to be audited by both of you. You are branch auditor, first of all, you are a branch auditor only. But the branch auditor himself, branch auditors can be joint auditors also. Don't think joint auditor means only for the main company. No, wrong. Joint audit is a concept. Joint audit is not a designation. Principal auditor is a designation. Branch auditor is a designation. Joint audit is not a designation. Understand? Okay. If two or more than two auditors were appointed for same scope of work, that is called as what? Joint audit. So, two or more than two auditors means what? From the same firm, two partners are coming. That is a no. Two different firms are auditing. One sole proprietor firm appointed, another partnership firm appointed. Both of them are appointed for the same company, for the same scope, for the same financial year, and the same statute. Then it is called as what? Joint audit. Is joint audit compulsory? No. Is there any reference to joint audit under Companies Act? Yes. Under rotation of auditors concept, 139 subsection 2, a proviso has been given. There, joint audit topic is indirectly discussed. What they said is, if shareholders decided, they can appoint joint auditors. That is what they said. So indirectly in the Companies Act, there is a legal footnote regarding joint audit. Only at rotation of auditors, and that too as a note to point it was given. It was not given as a full-fledged provision. So technically Companies Act is predominantly speaking silent on joint audit. RBI made it compulsory for banks. Banks which are having total asset size of some 15,000 crore, they must have a joint auditors of minimum some 2 or 4. Maximum number of joint audits shall not exceed 12. Okay, when joint auditors are appointed, how they will do the work? Joint auditor number 1, he will go do entire audit and come back. Again, second auditor will go do entire work and come back. Third auditor will go. No, joint auditors are appointed to reduce the work burden. All of them are for the main company, full company. They should report on the full company itself. But they will not do the full work. Joint auditors split the work between themselves. They split the work and then do. How they will split? They will split based on items of assets and liabilities. Some auditors will focus on some assets, remaining auditors will focus on remaining assets, some will focus on liability, some will focus on income and expenditure account. So items of income and expense, geographical area, some joint auditors will focus on north region, another joint auditor will focus on south region. Identified. Some joint auditors will do audit of unit A, unit B, unit C. Another joint auditor will do audit of division A, division B, division C. Period. Some joint auditors will look into quarter 1, quarter 3. Another joint auditor will look into quarter 2 and quarter 4. Like this, they divide the work and then do. Now, joint auditors, they divide the work and then do, right? What is the responsibility for other joint auditors' work? Do they have responsibility even for other joint auditors' work? No. Each joint auditor is responsible only for the work allocated to him. Whatever work he took, no, he shared, no. Only that he is responsible. He is not responsible for other joint auditors' affairs. But you should coordinate with, you must have a proper coordination among joint auditors. What? There should be proper coordination. If during the course of the work, a joint auditor finds any matter that affect the other joint auditor work, then he shall bring it to the notice of other joint auditor before the date of audit report. This is a requirement. Suppose you are doing work, in the course of doing the work, you found some issues related to purchases. Purchases is audited by another auditor, not you, another joint auditor. You found some severe negligence, severe irregularities. You should immediately tell that you should immediately inform that matter to other joint auditor who is actually dealing with the purchases. That is a moral responsibility for you. You cannot say, since that is not my area, that is his area, I am not responsible. No, you are responsible to communicate him. That's it. If you fail to communicate, it amounts to misconduct as per code of ethics. Why? You didn't comply auditing standard. You clear? Same way, other joint auditors, no, if they find something relating to you, if something that is affecting you, they should also come and report. That doesn't mean you are responsible for his work. No. Is he responsible for your work? No. So this is called division of responsibility. So joint auditors will have a separate individual responsibility, but there are some works which cannot be divided. There are some works which cannot be divided. For example, reading the financial statements. Hey, you read notes to accounts 10 pages, I will read 10 pages, he will read 10 pages, he will read 10 pages. Like the 12 joint auditors divided 10 pages each. Is it possible? Financial statements, whether they are presented and disclosed properly, all the joint auditors are combinedly responsible. So there are some areas where joint and combined responsibility will be there. In the following areas, all joint auditors will have a combined responsibility, indivisible responsibility, when the work is not divided. When the work is not divided, some works are there. Control evaluation is there. Suppose in a company, no, internal controls you need to check. Internal controls you didn't divide between yourself. So as a whole, risk assessment, internal control, all of them together they have to do. So there, all of them are fully responsible. Decisions taken by all of them together. Matters brought to the notice of all joint auditors. Some issue is going on and everybody has knowledge of it. None of them reacted on it. Everyone is responsible. And examining financials of the company, whether financial statements are prepared as per relevant statute, whether the financials are prepared as per applicable framework, all the joint auditors are responsible. For verifying presentation disclosure as per applicable framework, all of them are responsible. For ensuring audit report complies with the relevant standard. Why audit report? You know, do you think joint auditors give a separate audit report each of them? No. All the joint auditors shall give a common report. Generally, all joint auditors arrive common conclusion, express common opinion through a single audit report. State Bank of India audit report, you see only one audit report. Below 12 joint auditors signed it. 12 joint auditors signed means all the joint auditors will come and give only a single report. Joint auditor is not bound by majority. Does it mean all the joint auditors should only give together collectively single report? Suppose now I am one of the joint auditor. For me, area allocated was purchases and sales. And I feel purchases and sales are completely wrong. I want to give adverse opinion. But remaining joint auditors, no, they are saying no, remaining areas and all right, they want to give unqualified opinion. But I want to give adverse opinion. Should I bound by majority? No. The disagreeing. If there is a difference of opinion, the disagreeing auditor can express his own opinion by a separate report. When you are giving a separate report, shareholders should follow which report? That is their choice. When you are giving separate report, no, why you give a separate report, why you give a qualified opinion, you will give a basis for qualified opinion, basis for adverse opinion, your objections, no, they will read. If they feel yours is genuine, they will follow yours. If they feel this is nonsense, he is too much, and they will follow the other joint. That's their choice. Are you clear? But when multiple audit reports like this exist for the same company for the same year, in the other matter paragraph of each of these report, in other matter paragraph of each of these report, they should refer about other auditors report. That is what auditors report in other matter paragraph means. Understood? Now in joint audit, what are the special considerations? All the joint auditors together should develop an engagement letter and give it to the company. All of them should commonly get a management representation letter. All the joint auditors should involve in development of strategy. All the joint auditors should develop the joint audit plan. And joint auditors shall assess risk. All of them shall participate in the risk assessment process and inform to other joint auditors about the risks that they identify. All the joint auditors should discuss and document nature, timing, extent of procedures to be performed in common areas and special areas. All of them put together, they have to discuss how we should go further, at what time, what work should be done, extent of audit procedure, how much sample I should cover. All of them should discuss and then document it. And joint auditors should give common engagement letter, obtain common representation letter. The allocation between joint auditors is there, a work allocation that should be documented. And that should also be communicated to those charged with governance. 12 auditors were there. Each of us are doing which work? You should communicate to top management also. Tomorrow after audit is over, if at all they want to find some issue, they have some issue, they want to talk to auditor. Which auditor they will call and talk. So if they know that what work each joint auditor did, if they know that, they will directly call the concerned joint auditor. Clear? With this 299 is completed. 600, that portion branch accounts audit is also completed. 706 other matter paragraph is also completed. Easy. Now look at once again the 706. What is the manner of presentation? Other matter paragraph. The auditor shall include other matter paragraph only when it is not prohibited by law. In India, there is no prohibition. And when a 701 applies, this matter is not decided as a key audit matter. The emphasis of matter paragraph, other matter paragraph can be used for any matter that is not decided as a key audit matter. If it is decided as a key audit matter, why once again discussing here? You are anyhow discussing it under key audit matter. Duplication to avoid, they put this condition. Further, other matter paragraph shall be given in a separate section of the auditor's report. Other matter paragraph shall be given in a separate section of the auditor's report. So when auditor includes another matter paragraph, it shall be included in separate section with a heading called other matter. And one more thing, whenever auditor decided to include emphasis of matter para, other matter para, whenever auditor decided to include emphasis of matter para, other matter para, directly don't include in audit report. Tell the management that you are including this. This is how you are going to draft. Give them the draft emphasis of matter paragraph, draft other matter paragraph, how you are going to include. Management will read. If they read, no, they understood. Sir, other matter paragraph emphasis is only just for highlighting and letting people know some facts. Correct? But you are writing in an objectionable language, sir. So can you modify that? So sometimes no drafting mistakes might happen. Why? That's why we should communicate with top management whenever we are including emphasis of matter paragraph and other matter paragraph. Now let's discuss this 705 introduction, this table. This introduction, this diagram. I told right at the beginning of the session, audit report is two types. One is unmodified report, modified report. When we will call it as a modified report, even if you are including emphasis of matter paragraph, even if you are including other matter paragraph, but still you are giving unqualified opinion only. Your opinion is unqualified only, but the report is modified. Why report is modified? Because you are not following 700 format. If at all you are following audit report format as it is given under 700 format and giving to the client without modifying the format, that report format is called as what? Unmodified report. The moment you want to include emphasis of matter paragraph, other matter paragraph, we call it as what? You are modifying the report, right? 700 format you are modifying. Why? By including 706 content. Correct? Suppose you are modifying opinion. Then also when you are modifying opinion, 700 format you are not following, right? That is also treated as what? Modified report. They will give you this question. Under what circumstances auditor will include additional information in the auditor's report? Under what circumstances the auditor will include additional information in audit report? Additional means what? Anything that is not given in 700. Extra you are adding. That is called as what? Additional information. Indirectly, under what circumstances auditor will modify the report? Remember, it is not modifying the opinion. I am talking about modifying the report. When auditor deciding to use an emphasis of matter paragraph or other matter paragraph or material uncertainty related to going concern, even suppose if SA 570, if you are including that matter, that also modified report. Even if you are including key audit matter, that also here, that is also called as what? Modified report. Clear or not? Next. So that's about other matter paragraph, related standards 299 and branch accounts and audit concept, all that is completed. So I'll go back to this. So emphasis of matter paragraph is completed and other matter paragraph is also completed. Then let us discuss what is a key audit matter. Just 2 minutes, I will continue. Yes. Now we'll discuss key audit matter. What is a key audit matter? If you observe the definition of key audit matters are those in professional judgment of the auditor were of most significant in audit of financial statements of current period. That's the definition. So key audit matters, you see, key audit matters are those that in auditor's professional judgment were of most significant in audit of financial statements of current period. These matters are selected from matters communicated with those charged with the governance. So what is a key audit matter? Like I will show you Tata Motors, just a straight example to better understand. You see here Tata Motors have presented key audit matter. The valuation of defined benefit obligation. One of the key audit matter what they selected is what? Valuation of defined benefit obligation. If you want to know more about that, note number 37 to the financials, you please refer. That is what they're giving. The company operates an exempted pension scheme for its employees. Based on management's assessment, the exemption status of the schemes calls for an automatic cancellation at the end of 3 years. Okay. The Supreme Court petition by various individuals represented so and so, all that. While the company believes that their scheme should now handed over to EPFO, since the same has not been accepted, the company has involved an actuarial expertise to evaluate the pension liability. Some employee benefit valuation, employee benefits related. Significant effort has been gone into the interpretation of the Supreme Court order, all that. The risk is that the judgment used for valuation could lead to an error resulting to an inappropriate valuation. Accordingly, this matter is designed as a, in view of the significance of the matter, we applied the following procedure in the area to obtain the evidence. Like you see, they discussed what is the issue here. Are they trying to object anything here, by the way? No. Is it materially misstated in the financials? No. They are talking about some issue that is going on. They are talking about some issue that is going on for which company has already accounted, everything disclosed honestly, nothing, everything is over. We are just discussing what is going on and how the matter was addressed in our audit. How in audit they tested it. So they tested some test of controls, then they tested some actual transactions, they verified values, computations, all that, and that's how they got sufficient appropriate evidence regarding that particular pension related program. Understood? What is key audit matter? Key audit matter. In audit, what is important matter according to you? You have done audit of Tata Motors, right? So many matters, so many issues you have verified, right? In these many issues, do you feel anything important that you want to share with us? By the way, emphasis of matter paragraph is different. Emphasis of matter paragraph is what? In financial statements, balance sheet, P&L notes, some important point is there. You want me to read that? Okay. Tell me which point to read. Highlight in the audit report. I will go and read it. Here what I'm asking, you did audit, right? So many days you performed audit, right? So many matters you verified, right? Have you felt anything that is important according to you in this entire audit? That may not be highlighted in that may not be there in the financial statements. Key audit matter is not necessarily something about the matter disclosed in financials. Key audit matter can be a matter that is not even disclosed in financials. Suppose I can talk about a billing software. Company has recently implemented some billing software, and to understand that software we did so many works. I can talk about that in the key audit matter if I feel it is important in the audit. Sir, regarding that, no accounting software, no discussion is there in the notes to account, sir. How come you talk in key audit matter? There is no such link. Discussion in the notes to accounts and financial statements is required only for emphasis of matter, because you have to highlight some. If you want to highlight, there must be something, right? Otherwise, how come you highlight? So emphasis can be used only if something is there in the financials and you want to highlight that, then only you can use emphasis. Key audit matter, no such link. If something is there in the financials, you want to talk about that in the key audit matter, good. Even if something is not there in the financials, you want to talk about some audit issue, the issue that you faced in audit, which you feel it is important, you can discuss it here. So key audit matters are nothing but those matters which caught attention of the auditor. Those matters which caught attention of the auditor. All those matters are called as what? Key audit matters. So key audit matters are those matters which caught significant attention of the auditor, and it is not necessarily something that is disclosed in financial statements. You may talk about something disclosed in financials under key audit method, that is your choice, but that is not necessarily something that is disclosed in financial statements. So what auditor will talk, he is just explaining an example of how, what is important according to him and how he audited that. He is just explaining how he audits by taking one example. Which example is taking? Whatever according to him he felt important in that particular year. Can I talk about previous year issues in the key audit matter? No, current period issues only I can talk in key audit matter. By the way, can I suppose company forgot to disclose something in the notes to accounts? Can I disclose the same in key audit matter? Key audit matter is not a substitute for disclosure in financials. There is a material misstatement in some notes to account. If there is a material misstatement, what should I do? Modify the opinion. Modify the opinion. Can I discuss it under key audit matter? So key audit matter is not a substitute for modified. By the way, here I'm talking about some pension, right? Defined benefit obligation, something, right? Am I giving separate opinion on this? No, key audit matter is not a separate opinion. Is key audit matter a substitute for 570 material uncertainty related to going concern reporting? No. Then what is the purpose of key audit matter? Just to give additional information about the audit. Just I want to enhance the audit report value. Audit report is not a boring document just which contains opinion. Audit report contains key audit matter discussion, what auditor felt important in the audit, so I can share it. Are you getting it? How many you should give as a key audit matter? How many matters you should discuss there? Your choice. Either 1 or 2 or 3 or 5 or 10. State Bank of India auditors gave once upon a time 9 matters. 9 important issues they discussed. Is key audit matter useful to the shareholder? No, not at all. Just giving, that's it. Other matter paragraph is useful, emphasis of matter paragraph is useful, remaining are all useful. Technically speaking, key audit matter is not useful. What Tata Motors auditor doing? What is key audit matter? He told. So and so pension related Supreme Court issue, something is going on. How he verified, he is telling. Why do I know? Why should I? How it is useful to me? What you did all that? Correct? Suppose you went to a restaurant and ordered some food. Chef is coming and explaining, sir, this is how I cooked. This is important dish for the day. This is how I cooked, sir. Please listen. Sit and listen. Before you have, sit and listen. Tell me how it is useful to you. Exactly. Key audit matter is exactly demonstrating that. Key audit matter is exactly demonstrating what according to auditor important for him in the current period audit. He selected that is important item. And right side, what is he explaining? How he audited that is explaining. Why I need that? Are you getting this? In order to give more transparency about audit, you are confusing me. Through key audit matter, auditors are confusing us, in fact, because they are giving unnecessarily extra information. As a shareholder, I will not have knowledge of key audit matter. CA inter audit students itself don't understand what is it. How a normal shareholder understand what is key audit matter? What he will think, something is going on, note number 57, what went wrong, he will think immediately. The moment he see key audit matter, so and so issue, something is going on, he will think, correct? The possibility of misunderstanding is extremely high here. Then what to do? We want it to be more transparent. So key audit matter is compulsory for listed entities. Key audit matters are compulsory for listed entities, or if there is a requirement in law or regulation, then also you must give key audit matter. If at all auditor felt, okay, it is not compulsory, I am also not a listed entity, but I want to give something, I want to communicate in public interest, then also you can communicate key audit matter. Understood? Now, what is the purpose of key audit matter? To enhance communicative value of audit report by providing greater transparency about what audit that was performed. How you audit, why you are discussing all that, that's unnecessary for the shareholders. Key audit matter provide additional information to the users to help them in understanding the entity and areas of significant management. Tell me, when I'm communicating key audit matter, no, can I randomly pick any audit issue and then discuss? No, which issues I will pick up? Those matters in the audit where I felt high risk is there, where I felt high judgment is involved, or the matter is related to a big transaction that is happened during the year, big event that has happened, significant transaction and event. These issues only I will discuss. No, key audit matter. Tell me, in audit of current period, no, generally what I will feel important? What I will feel important in audit? Either it is a significant transaction, or it involves a significant judgment, or it involves significant risk. If any something significant is there, that is why it is an important issue. If nothing is significant, immaterial, will I select it under key audit matter? Key audit matters. Determining key audit matters. How selection of key audit matter happen? How auditor can select? Auditor can select key audit matter from the following areas of high risk or significant risk. Significant auditor's judgment related to financials or significant events or transactions. So any of these can be the reason why we are selecting key audit matter. Tata Motors selected defined benefit plan because significant judgment is involved in calculation of pension provision amount, where they used the help of actuaries and all. Significant judgment is involved. That's why they selected it as key audit matter. How should you communicate key audit matter? The auditor shall describe each key audit matter using appropriate subheading. Key audit matter you should communicate. Each key audit matter should be described with a subheading. Tata Motors did that, no? They directly didn't discuss matter. First they used a subheading. Correct? Valuation of defined benefit obligation. In a separate section of the audit report under the heading key audit matters. Tata Motors used side heading key audit matters. Inside that section, subheading of each and every matter is given. So key audit matters are those in professional judgment were of most significant. This is how introduction you should give. And these matters were addressed in the context of audit as a whole. I mean, in these matters were addressed in the context of audit of financial statements as a whole and in forming opinion, and auditors does not provide separate opinion. This is introduction language in the audit report. In audit report, this should be the introduction to the key audit matter. See, Tata Motors, they gave that introduction. They gave that introduction, you see. Key audit matters are those in our judgment were of most significant in audit of standalone financials of current period. These matters were addressed in the context of audit of SFS as a whole and in forming opinion on the financials, and we are not providing a separate opinion on these matters. This is the introduction language to key audit matter. Then you talk about each and every key audit matter with a subheading. You see, they have given subheading. One is relating to key audit matter. One key audit matter is relating to some deferred tax. Another key audit matter is relating to some pension, defined benefit plan. And some other key audit matter, only 2 key audit matters have selected. That's it. They have selected only 2 key audit matters. Easy. What they reported, what is the matter, how they audited. How they audited. That's it. They are just discussing that. So that's about key audit matter. Now tell me, obviously, whatever matter you determined as a key audit matter, you must communicate it to the top management, right? You must communicate it to the top management. And if at all you decided, if applicable, if the auditor decided that there are no key audit matters, then communicate the same to the management that there are no key audit matters, and also in the auditor report that there are no key audit matters. So key audit matters side heading you will put, you will use the introduction language, all that. Below you will mention that in this year we determined that there are no key audit matters. This disclosure is required for which companies? Listed entities. Like for listed entities, compulsory key audit matter. Suppose you felt nothing is key, nothing is important in this audit, then say that it is nothing is important. Understood? So that's it. This is what 701 standard is about. Key audit matter is over. Next, so key audit matter is over. Now we are still left with material uncertainty.